Good morning. If you're tuning in early, we'll be starting exactly at 5:30.
United Force. It was historic not only in the operational scope, but in the level of joint communication displayed across every element of the joint force. And as I said earlier, this work is just beginning and will continue. So now to talk a little bit about setting the force and setting the theater. On the order of the Secretary of War over the last 30 days to reinforce deterrence and provide the President with credible options should action be required, the Joint Force began to systematically reposition assets and personnel across the region. These movements ensured that U.S. forces remained postured, protected, and ready to respond decisively for any emerging threat. This deployment included thousands of service members from all branches, hundreds of advanced fourth and fifth generation fighters, dozens of refueling tankers, the Lincoln and Ford carrier strike group and their embarked air wing, sustained flow of munitions, fuel, supplies, all supported with command and control, intelligence, surveillance, and reconnaissance network. And the flow of forces continues today. In fact, Admiral Cooper will receive additional forces today. This rapid buildup of forces demonstrated the Joint Forces' ability to adapt and project power at the time and place of our nation's choosing. I want to highlight a couple specific cases for you. The Gerald R. Ford Carrier Strike Group, which many of you know was down in the Western Hemisphere, redeployed across the Atlantic to set the theater. The ship, the crew, their families, and the entire strike group took a deep breath, and as they always do, began planning to conduct combat operations. The integrated reserve and National Guard forces have continued to demonstrate the value of America's reserve forces, including the Wisconsin Army National Guard operating in Kuwait and Iraq, and Air National Guard units from a variety of states to include Vermont and Virginia. In the case of the Vermont Air National Guard and the 158th Fighter Wing, they were mobilized for Operation Absolute Resolve and then were tasked to take their F-35As across the Atlantic before going home to be prepared to support this operation. The same is with our Air National Guard and Air Force Reserve Command tanker and mobility forces who stepped right out of their civilian jobs to deploy and to protect the region. Lastly, I want to highlight the unsung heroes of warfare, our American logisticians and sustainment force, those who quietly work every day behind the scenes to project and sustain America's combat power. Our leaders from World War II were right when they said professionals do logistics. As regional tensions rose, the Joint Force elevated our force protection measures on the order of the Secretary and repositioned discreetly civilians and non-essential personnel designed to ensure the safety and security of our joint force. By the time operations began, only essential forces remained on our bases and in theater, all ready, capable to respond. So now let me move to H hour. At 15:38, 3:38 p.m. on Friday, February 27th, the United States Central Command, through the Secretary of War, received the final go order from President Trump. The President directed, and I quote, "Operation Epic Fury is approved. No aborts. Good luck," close quote. In the region, every element of the Joint Force made their final preparations. Air defense batteries readied themselves, checking their systems to respond to Iranian attacks. Pilots and crews rehearsed their strike packages for the final time. Air crews began loading their final weapons, and two carrier strike groups began to move towards their launching points. Across the globe, our operations centers came alive in Tampa, Florida, here at the Pentagon, and of course forward in the Central Command AOR. forces and began to conduct strikes across the southern flank in Iran. On the ground, forces fired precision standoff weapons, measured, deliberate, precise, and
We'll get started with the Smart Money broadcast in about 3 minutes. Just listening to Bloomberg. Top of the news this morning is the Iranian war, the war with Iran. Market appears to be pretty stable. I'm looking at the ES futures right now.
naval forces, ballistic missile sites,
We'll start in a couple minutes.
infrastructure designed to daze and confuse them. Coordinated space and cyber operations effectively disrupted communications and sensor networks across the area of responsibility, leaving the adversary without the ability to see, coordinate, or respond effectively. The combined impact of these strikes, swift, precise, and overwhelming, has resulted in the establishment of local air superiority. This air superiority will not only enhance the protection of our forces, but also allow them to continue to work over Iran. Over the course of the last 2 days, the Joint Force has launched hundreds of missions from land and sea and delivered tens of thousands of pieces of ordnance. The effort continues to scale. This included American B-2 bombers, which again, similar to Midnight Hammer, flew a 37-hour round-trip sortie from the continental United States, dropping precision, penetrating munitions on Iranian underground facilities across the southern flank and slightly deeper. Additionally, Israel has separately executed hundreds of sorties against hundreds of targets. Beyond Air Force and Navy aircraft strike packages, coordinated salvos of precision standoff weapons from across the region have neutralized hundreds of pre-planned targets. As I mentioned earlier, in support of these kinetic operations, U.S. Cybercom and Spacecom have continuously layered effects to disrupt, disorient, and confuse the enemy. I will note that this operation had several combat firsts, which I'll allow at some point in the future Admiral Cooper to talk about since he owns the AOR. While we prosecuted a relentless offensive campaign, our defense has been equally important. Across the theater, operations have remained steady and disciplined. Once again, our integrated air and missile defense network is performing exactly
Glory
as
Day
it's intended.
pre-market phase today is about structure, not prediction. Mark SPX and XPS high low swap and liquidity.
Continue to coordinate and execute intercepts with precision and consistency. I wish that every American could hear the voice communications like I have as these joint operations centers remain calm, focused, and cool while executing under fire over and over again. Collectively,
All right. It is that time. It is 5:31, so we'll officially kick off the Smart Money broadcast. But before we do, I want to put God in front. I want to give God the glory. This all started with a prayer, and it is a miracle to me to be able to share this with you. Sharing the insight, knowledge, and wisdom that God has revealed to me regarding the stock market, particularly the market structure. Okay, so this will be a broadcast of the market structure of the SPX and the futures ES, S&P 500. Okay, so with that being said, I am sharing this for informational purposes only. It's my own proprietary system. I'll comment on all the trial and error and research that went into this system as a result of my own research, and it's a strategy that I use in my own real account. While it's a principle-based strategy, the strategy is subject to change. By sharing my trading activities, it's not a solicitation from me to buy or sell securities for others. Trading involves risk with possible loss of principal. Sharing my live trading sessions should not be construed as investment advice. Okay, so with that being said, as I mentioned, we're going to be looking at the futures ES and the SPXW. For me, I'm on TradeStation, which is the chart you're looking at now. However, I do realize that we have some of our tribe on Robinhood and Thinkorswim. The charts work the same way across all platforms. For the most part, you will be able to track the futures S&P 500. We use that for bias purposes only. We want to have a little sneak peek at what's happening at our VWAP line. You see the pink line there. That is the VWAP line. We use that line to establish the direction of the market. Okay, I'm on a daily time frame right now, but if I went to a 5-minute, you would see that we've got this bullish engulfing candle above the VWAP line. We use the VWAP line to determine direction and the weighted average price. So that's like the mean that we use, the line that we use to establish the direction that price is likely to travel in. And I will get more into that as we proceed to give you what you need. Okay, I'm going to break down the entire structure of the market piece by piece. The goal is to always get 1% better every day. And we're going to start at the top and we're going to work our way down in terms of topics and analytics that I use to trade profitably in SPX. So I'm going to narrow it down specifically to SPX. It is the only instrument that I use for trading purposes. There's no need to master them all. You just master one and you max in. You're more likely to profit in options trading. I'm talking specifically options trading. There's only one instrument and one strategy that I use. And we'll get into that in just a few seconds. So yes, that was the introduction of the SPX. I talked briefly about the VWAP. Next on the agenda is we'll be discussing the iron condor. Specifically, I use a broken wing iron condor. It is a spread strategy. It involves calls and puts. Calls is the upward direction of price. Puts is the downward direction of price. The condor is a spread, which means we sandwich the price and in a range, and we that's how we make our money. We sandwich it. So I use the broken wing iron condor for the sake of it's a high probability trade. We in the workshop, thanks for coming to the workshop. It was very productive. I got a good idea on how to proceed with instruction and training and sharing moving forward. I'm able to see where we all are in terms of levels and skills and experience. And I will come up with a really good plan to help us continue to grow. So with that being said, we'll talk about strike placement and trade structure. Placing your strikes. The strike is the price of the call and put. I'm going to leave that simple for right now. And we'll talk about exit strategies and profit taking. What I want to emphasize starting now is the name of the game is risk management. And the golden rule is not to lose money. And if we stick to the 25% take profit principle, we will most likely be successful 9 out of 10 times. See, 25%, take it. Over the long run, you will be you'll win more trades than you lose. Okay, we take those base hits, those singles, and we can deposit that in the bank. Anything beyond that, we're assuming greater risk. And with that being said, what we're going to do next is we're going to go ahead and generate our smart money roadmaps. So what I showed in the workshop is that you take a screenshot. You literally take a screenshot. We had a little confusion, but you literally can take a screenshot of my screen or your screen if you have your screens up. You take a screenshot of the ES right here. So just point your camera at my screen if you're following and just take a screenshot. Literally, like step one, take that screenshot. And then step two, I'm gonna go to the SPXX. I don't wanna confuse you, but you're about to get confused. Okay, so the SPXX is a weekly version of the SPXW. The SPXW trades daily. So we are 0 day to expiration traders. That means we're day traders. I'm a day trader. So this is what I do. I day trade. I am not holding this option trade past today. And most likely I will only stay in this trade for an hour, 90 minutes, and take my 25% profit and be looking for the next trade. With that being said, I'm looking for two A plus setups today. A plus. That means I'm not just throwing money out there. I'm looking for certain probabilities, and I'll explain what they look like in just a few minutes. But we are looking for the A plus setup. We place our trade and we close it today. Okay. So with that being said, the SPX is a weekly which causes the VWAP line to show up. Now on SPXW, we do not get a VWAP. However, the SPXW and the SPXX are identical, except one trades every day, the other one trades weekly, and the SPXX gives us a VWAP line, which we utilize to help determine the bias of the market. So with that all being said, I know that there's like some confusion on that. I'll try to clarify that for you, but for all intents and purposes of tracking our stock today, our index today, we're using SPXX. Now on some platforms, you're not able to find it. What I suggest you do is you use the 4-screen method as I had showed you on Robinhood. You pull up the ES, you put that in one chart, and then you use the SPXW for your second chart. Yeah, so charting. This is the screenshot of the ES futures. So what we're going to do, I just got a text. You need to take a screenshot of the ES futures chart. Oh, sorry. Oh, I see what you're saying. We need to go back to the ES futures chart. So ES, you can pull, Robinhood, I don't think they do a good job of using this chart. So here's the ES futures chart. Take that screenshot right there, and we're gonna use this as our guide in terms of the bias. So we're looking at this roadmap as if we're getting on the freeway and we have a GPS navigation system that's going to direct us to Profitville. Okay, so but we have to get our GPS up and running. So we take a picture of the ES futures. And now I'm going to go to, well, you can actually most likely in Robinhood go to SPX and take a screenshot of that. And let me get my screenshot of what I need, the SPXX. I'm going to take this screenshot. I'm going to make it a widescreen. Okay. So now I've got the screenshot, and here's what we're going to do. We're going to take the notes that I sent you. What notes, Titus? Let Coach find the notes. So at this point, you should have two screenshots. One of the ES futures and one of the SPXW, or in my case, I'm using the SPXX. Okay, so you take your screenshots. I found my notes. So you want to tell your GPT or your Gemini or your Gronk or whatever AI app you're using, you're going to need an AI app. I mean, it just makes, we call this the thesis. So we're formulating a thesis right now of the market structure as we see it in this instant. Okay, so AI helps us formulate a market structure. That's one of the useful features of AI. I don't look at it as evil entity. I look at it as a tool. Well, I say that because the prices dropped in AI because of fear. AI is not going anywhere. If anything, it's going to be deeper embedded in our everyday function in life. So it's here to stay, but, prices did, they did dip with NVIDIA's stellar earnings report. So anyway, let me refocus on getting this smart money roadmap generated. So you copy the notes that I provided you with. You put it in your AI along with the screenshots. You got 2 photos going in there along with the notes. And let's see what we get back. So once we get it back, today's lesson. Okay, so here's the lesson of the day. We're getting 1% better every day. It's on the 5-minute. I'm using the 5-minute chart to get the market structure. We like to use the 5-minute in terms of structure because that is actually going to turn into our execution trigger, which will be our exit on the freeway, our entry. So we're looking for an entry or an exit on the 5-minute trigger. So we use that 5-minute to confirm whether or not the VWAP is holding. It confirms compression before a premium sell. It uses volume spike confirmation, and we execute the VWAP once the structure stabilizes on the 5-minute. I know that was a lot, but I will get back to it. We're using the 5 minute. That's all you asked. Okay. All right. Sorry about that. Yeah, 5 minute chart. And oh, yeah. Okay, so once we get our 5 minute chart, here's the lesson of the day, 1% better. We're gonna mark off the previous day's high and low. I'm gonna draw on this platform. I can only draw lines, but I'm gonna draw 2 lines, one at the previous day high and the previous day low. What is the previous day high, Titus? Well, that is the highest price that buyers were willing to pay. Okay, so we're gonna mark off the highest price buyers were willing to pay from the previous day. Yes, in our case, that would be Friday. Okay, so, however, I'm gonna mark it off in SPX. Not on, well, I'll mark it off on the futures just out of exercise. However, there are subject to be some differences. Are the notes not in? Does everybody have notes out there? I thought I put it in the Tribe of Traders. Well, here, I will do this. It's not too complicated. I can throw them in there real quick. Copy. All right, guys, I'm putting the notes in there. All right, so notes are in Tribe of Traders. Maybe I'll just send that every morning to make it easier. It's not a big deal. Just try not to blow you. I personally try not to blow your phones up, and I do appreciate you texting me direct, as opposed to putting it all in the thread, because that could disturb some of our tribe members. So during regular trading hours, it's okay to use the text thread, I hope. If it disturbs like others at that point, they can like turn the thread off or block it, and then don't forget to turn it back on though if you turn it off. Otherwise, during regular training hours, I would prefer to use the text thread, because if it's informative, and when I'm teaching, when I'm training, I try not to use specific names, because if it applies to you, it probably applies to others, and sometimes many. Okay, many people. Okay, so with that being said, let's check on if Grace has generated my PDF yet. Oh yeah, looks like she generated my PDF. Let's see what she's saying. She didn't do a good job on the first round. She didn't plug in any of my numerical data. So I'm going to have to go tell Grace to, come on, quit acting up and holding out on the report. I need numeric data. I'm trying to teach Grace to give it to me every single time. Like, I don't want to request it, just give it to me. So I want all numeric data. With an exclamation point. And I'm going to say all the time. Every time. All the time, every time. I don't know, how do you emphasize that? Every time. Okay, let's give Grace another shot here to get my data right. Come on, Grace. All right, Grace is telling me from now on, every smart money roadmap, I will generate all numerical levels by default. Okay, that's what I want to hear. And where's my PDF? And of course, now she's going overboard, but that's okay. I'd rather she give me too much data than not enough. Grace is asking for one more screenshot, so I'm going to oblige. That's one thing about AI is you have to watch out for the rabbit hole. It continues to like make new offerings, and just make sure you get what you need and don't go too far. Don't go beyond that. ES, and then, oops. Yeah, this is what my chart looks like when I pull up SPXW because the market is closed right now. Yeah, that data is not useful. However, I think on Robinhood you do get no, you actually don't get anything yet until the opening market, which is why I think it's a better idea to go ahead and get a roadmap, smart money roadmap based on what I'm showing you right now, the SPXX. At least you'll have something to work from when market opens. And speaking of that, if you see that there are some variances between your smart money roadmap and what you actually see in terms of price action at the opening bell, you can then take a screenshot of the futures S&P 500 and the SPXW, which is what we'll be using for our instrument. You can then take a current, up-to-date, up-to-the-minute, real-time screenshot of the futures and the SPXW with the notes, and your chat GPT or your AI will generate a new report. I generate a new report anyway throughout the day, at least 3 other reports. First quarter, second quarter, third quarter, and maybe even the fourth quarter. I may generate 4 reports on any given day based on the behavior of the market. I'm always looking at probabilities. What are the probabilities? Okay, so I'm giving Grace what she's asking for. Getting ready for this. Oh no. We've got Tribe out there that is preparing for their workday. Here's the way this is going to work. We're going to draw this box once we get this roadmap, and that will open up the first trade window. So we'll enter the first trade. Now exit the trade, I think shouldn't take more than 60 minutes to 90 minutes to exit with 25%. Sometimes as fast as 15 minutes. So we'll keep an eye on that, as well as once we get familiar with how to set the trades up, strike price, calls, puts, we will look at placing a limit stop order. Okay, what that means is you'll enter your exit price with 25%. So you're going to know how to set your limit price. It becomes automated at that point. No emotions, nothing else necessary other than to just submit the stop order limit price. Once you put that in, it will automatically close it out for you at 25%. You can do that. So I know you don't have time to do as I do. This is, technically my job, full-time job. Well, this is not really full-time because, the best trades, happen in an hour or 2 hours, 3 hours, like you're done. So, that's my new goal is 2 A+ setups a day. Today's goal is $1,000. I'm going to show you how to scale these accounts up. I wish I could actually show you my trade, like structure and flow and so forth, but I'll do the best I can. I'll figure that out. Anyway, back to what I was saying was setting that limit price. Okay, so we'll get to that. In the meantime, you have to monitor it and manage it. So hopefully you can get that done before it's time to go to work. Or maybe I'll be able to get to that today. Not exactly sure because we are starting from the top and we're going to be looking at the previous day high, previous day low in just a moment. Remember, I said that the previous day high is the highest price buyers were willing to pay. The previous day low is the price where the sellers took it. So the sellers sold down into the previous day low, and that was how we came to the previous day low. So here's, I think I have my roadmap. Is it ready to go? Yeah, this took a minute. Jeez. Now she's asking me, I always want a PDF. That's why we get started at, what I think is relatively early, because you gotta get your AI dialed in. Okay, so it's analyzing. So I think we have a firm understanding of what the previous day high and the previous day low is. With that being said, it's analyzing. While my report is being generated, I'm going to talk about quarter one. It's coming up.
American stock
Hold on.
market is down, with the S&P 500 down 0.4%, the Nasdaq Composite Index down 0.9%, and the Dow Jones Industrial Average down 1.1%. SPX and SPY update.
Just got a report that the market is down today, which brings up a good point. We're always concerned on whether or not the market is going to crash. Well, I don't know. To me, it crashes all the time. And what that means overall in general is there will always be supply and demand. What we're looking at is the top 500 companies on our chart, on our screen. These candlesticks represent the buying and selling of the top 500 companies in America. There will always be supply and demand as long as we exist. As long as there are people on the planet, there will be supply and demand. The only way the market crashes is if we have this big power outage or something. Then we cannot do trade at all. So nothing moves. if all the energy in the world just goes down, nothing is going to move at that point. But that's literally about what it takes for trade to stop. The world is based on trade. It always has been, and it always will be. We trade. And trade is based on supply and demand. What am I saying? I'm saying that people will always have a need for goods, services, and in now this era, we need technology in order to function on a day-to-day. Technology is bought and sold, as you know. Goods are bought and sold. They always have been. So how does that reflect on a market crash? You can interpret that. But to me, it means that I'm always going to be in the market because the market's going nowhere. It crashed before in 1929, like almost 100 years ago. I mean, that was a severe market crash. We've had ups and downs. However, that was like the big one, right? The Great Depression. And there were specifics to the reason it crashed. However, what did that mean? That means that you could buy stocks. You could buy at the cheapest prices in history. And then what happened? It eventually rebounded. It came back up. So if you had, I know like not everybody had money and it was a depression, but those that did have money and bought stocks at that time created generational wealth that probably is still in existence to this day. So we need to change our mindsets and become institutional in our trading psychology and habits. That's what I have on that. Anyway, my report generated. So let's take a look. I'm excited. Okay, here we go. Just taking a look at the highs and the lows, baby. Okay, so I have a high of 69.12 and a low of 68.47 on the SPXX. All right, so on the 5-minute chart, I'm gonna break out my Apple Pen. I love it. I find that I love this pen. Okay, so what my roadmap is telling me, we're setting our GPS. So it's going to take us to Profitville, hopefully. And we're setting ooh, 6/9/12. Oh, right. Oh, I see. So see how that's right at the top of this range right here? Okay, I'm gonna make that gold. Ooh, well, yellow. How about that? I want it to stand out, so we'll go yellow. Beautiful, beautiful. 6847. 6847. That's gonna be at the bottom, isn't it? There we go. Oh, come on. Ah, there we go. Come on, slide with me. Slide, work with me. Trying to get the line to work with me. Gee, I'm not being very artistic today. Sorry, guys. Let's delete that one. And let's start over. Okay. Okay, that one placed nicely. Oh, I said 6847, but I want to nail that wick. So I'm changing it. I'm making it 6831. We just needed to go in the direction of, this is an imaginary box, right? I mean, I could draw the vertical lines, but it's not necessary. I'm sure you can track with me, maybe. I hope. Hope you're not being, I mean, I want you to be technical, but not that technical. Come on. Just trying to change my color. Oh, there we go. I want gold. I feel like Bob the artist. What's his last name? Yeah, Bob. Okay, so we've got our box. So our A plus setup and our A plus trade will come when price action gets to the top of the box or the bottom of the box. Okay, that is our high and low lesson. I guess we've got just enough time to go into the strikes real quick. The main lesson was previous day's high and low, which I covered. And if you have any other questions, you can go ahead and hit me up with a text, and I'll clarify and go deeper into the previous day's high and low. But I feel like I did a decent an adequate job of covering that topic. So next, the way my mind works, I know you may or may not be with me, but we will do, it's the same thing every day. So if you're tuning in every day, if you can attend at least one or two workshops, you'll have a working knowledge of market structure. So that's what I'm sharing, is my knowledge, wisdom, and insight on market structure. And it starts with previous days highs and lows. Okay, I've like beat that into the ground, I hope. So that's how we start our GPS of the market structure freeway. Like, I like that analogy, Barry, the freeway. So here we're setting our GPS. All right, so I'm gonna skip a little bit to like exit 298 on the freeway. All right, it's not exit 1, but we are now on the freeway because we have two possible destinations in mind. So once we establish the previous highs and lows, we are now able to start thinking about our strike prices. All right, so at the top is the calls, at the bottom is the puts. Okay, top calls, bottom puts. So with that being said, I am already considering putting my puts below 68.31 and my calls above 69.12. That's a strike price. I love that word, strike price, right? So I'm going to place my strike price above 69.12. So that would be a zone. Okay, so you can be aggressive and place it in the money at 69.12, but again, I'm going for the stress-free trades these days. You know, I've done my, I've been aggressive. I've been successful at being aggressive, but I'm even more successful when I'm a touch conservative. So what I'm saying is the credits, the premiums, the returns are still pretty decent, about $10 to $15 above 69.12. So I'll round up and say 69.20 to 69.25 for strike prices at the top on the call side. That's the call side. Okay. So now I'm looking down at the bottom. I'm saying, okay, my puts, we're going to say 68.30. I'm rounding down, okay, from what I see. So I'm just rounding the numbers. There's no need to make this complicated. Or I know it's already complicated, so we're trying to simplify. I'm rounding down. I'm saying 68.30 for the puts on the bottom. Puts are on the bottom, right? So I'm looking at that, 68.30, and I am going $10 to $15 below, just depending on what's down there. Okay, I'll explain that in a second. I look at this in levels. I'm looking at 68.20, 68.15 on the puts. So we're just waiting for confirmation, though. We need a direction of price action. I'm not guessing. I'm waiting for confirmation. I'm waiting for commitment from the smart money institution, and we place our trade with them, not against them. So we need to let them show what they're committed to. Are they committed to going to the top, which is 69.12, or are they committed to going to the bottom, 68.31? Okay. All right. So with that being said, we're going to continue to analyze the technical side of the roadmap to make sure we get to Profitville. Okay. So I'm looking at support and resistance levels. And I'm just going to drop all the way down to the third resistance level. Resistance is at the top. Okay, so I'm looking at the ceiling here. The ceiling resistance 69.12. Okay, what does that look like, Coach? Well, it's at the top of the line. So why do we call that resistance? Well, price has to get there, and it may not. It has to get through. Let's make this go away. It's got to get through here first, right? It's got to get, well, where is it? It's here. So it's been accepted here, but there's a resistance level. It hasn't been accepted there. So price could bounce right there. So based on my chart, I mean, I've got resistance levels at 685, 6900, and with the ultimate level 6912. Okay, that is the highest resistance level, but price has to make it there, and it has to be accepted at each of those levels. So we'll watch and see. That's what I mean. We got to be patient. We got to let the play develop. We got to travel on the freeway a little while and see if there's a roadblock, right? Okay, so with that being said, I'm looking at the top of the square, but from where price is now to where price is going, there's subject to be two roadblocks. 6885, price has to be accepted there, and it has to be accepted at 6900. Okay, so we've got that. All right, so next we're going to look at the support levels. So the lower support level I show right now is 6847. 6847. Okay, that is the lower support level I see. However, before price goes down to the support level, it goes down, support, up, resistance. Okay, that's a key note to make in your 1% better. All right, so resistance is the top, support is the bottom. Support's the floor, resistance is the ceiling. Okay, so from where price is now, it has to go through to get to the lower level, the bottom of the box. What has to happen? Well, price has to be sold, and they got to do some sales. I actually call it rejection. So price needs to hit the support level and sell through the support level there, which is 68.50, with the true target of being 6847. Okay, so with that being said, I'm going to, well, let's see, we can see the VWAP line is in my analysis. Where's my blue pen? I've got the VWAP line. The VWAP acts as, in this case, is support because it's underneath price action. So it becomes another level of support for the price. So that means when it hits a support level, it is subject to bounce back up. When it hits the resistance level, it is subject to bounce back down. So that's what we're observing. And that brings us to a couple of studies that I'll mention that to help determine the bounces. The volume, that's the buy-sell volume. How many people, how many dollars are involved in the buying and selling? That determines whether or not price will continue to rise or will it drop. Another metric that I use is the relative strength index. It's a lower study, so I'm in the lower studies. If you look at the bottom part of the chart, you start to see volume, RSI. The RSI tells us how strong the stock is moving. It's the speed. That's our speedometer, right? We're on the freeway to Profitville, and this is our speedometer. How fast or how slow are we going to get to the top? How fast or how slow will we get to the bottom? We use RSI to determine that. A high number would be 70. That means we're pushing. And then a low number would be 30. That means that we're slug bugging. So 70 is the buying action, and 30 is the sell action. Okay, we'll go deeper into that. I'm just giving you an overview. I look at the average true range also. That is the range that one candle takes up during a time frame. So one candle right now, if you look, it says 6. We'll just round up and say 7. Okay, it is taking up 7 points. So when the market is moving in a 5-minute frame, I'm able to tell you that it's going to move on average right now 7 points. So I'm able to calculate in time how long it's going to take approximately to get to 69.12, or if it's headed down to 68.31, I can tell you approximately in time how long it's going to take to get there. Pretty cool, right? Okay, so anyway, with that being said, we're going to look at the true supply and demand zones. I'm going to go through this really quick because I want another cup of coffee before the market opens. Okay, so we got the true institutional supply and demand zones. This is all based on supply and demand, guys. So we need to adjust our mindset. So supply is at 69.07 to 69.12. Funny how that's the top of the box, right? And you can almost guess where the demand zone is, right? What's your guess? If you said 68.47, 68.52, or simply the bottom of the box, you are correct. I went lower than that simply because, like, the zones. I know this instrument. Like I said, we stick to one instrument. Once you learn it, you understand that it overshoots the zones because it knows. They know where we are, but if we go just outside their zone, we can trap them. So we flip the script. All right. So with that being said, we've got all of our key levels. All right. So I just covered all the key levels. Looked at quarter one. Let's talk about our schedule today. Today I will be live streaming all day. So if you notice that the live stream isn't streaming, go ahead and hit me with a text. All right. If you want an update and I'm not like streaming at that particular time, go ahead and hit me with a text. I'll be at this all day today. I'll be taking breaks. I won't be talking like all day, but I'll give you the schedule of when I will be talking. Quarter one, 6:30 to 8 a.m. I'm usually, I'll take a break here and there, but I want to get us off to a good start, and that is the first trade window. 6:30 to 8 a.m. So I'm looking for it. I'm on the hunt today, looking for that A+ setup. Okay, so we can expect the first liquidity sweep at 68.47 or 69.12. This is not a prediction, it's a probability. They will target one of those, the top or the bottom of the box. They will target it. That is a most definite. The VWAP is 68.70. That is going to be the pivot line for right now. The VWAP line does move throughout the day, so we'll be getting constant updates on that because that is the magnet line. Let's see. So I will promise to be back live streaming at 8 o'clock if I do take a break. So live streams at 6:30, 8 10:30, and 12. Okay, I'll start each quarter 6:30, 8, 10:30, and 12. And I'll give you a quarter by quarter, play by play update. All right. However, most definitely here for the first trade entry, and I'll be closely to the live stream. I'll be close to the monitor until that closes with 25% profit. I'm looking to take $500 on that first trade, $500 on the second trade. Not sure about the third trade today, but definitely definitely action every day for 2 A+ setups using the iron condor, or the BWIC as I like to call it, broken wing iron condor. So during quarter 2, we can expect expansion towards range extreme based on the VWAP bias. Expansion towards range extreme, what does that mean? That means the edges of the box. And then quarter 10:30 to 12 is the compression zone. Most likely it'll be 68.65 through 68.85. And then quarter 4 is 12 to 1. We can look for the pin, so it usually gets pinned, and the probability is 68.80, 68.90. Nope, the quarters are the same every day. Are they different? I don't know. I work from the same page, so I'm not quite sure about that. But from the quarter play strategy, here, I'll take a picture of it. This is what I work from. I don't know if you can see it. I got shadows everywhere. Oh, this one's not so bad. It's kind of blurry, but I think you can kind of make it out. I'll revise it. This is just the quick, to your response. We had a question on whether or not the quarters change every day, and I don't want them to, so no. No, I'll try this.
Early trades.
Uh-oh, we're starting to get announcements. We're getting pretty close. Oh, there. I threw it out there. Hopefully you get it. There's some non-essential stuff on there, but the general schedule and outline and time frame is there. I should have just put that out there, because I want us to be on a schedule. I want you to know when I'm actually live streaming and not taking a break and so forth. So I'm still working out our daily schedule. However, this is definitely times that we want to be tuned in. All right, with that being said, coffee time, 5 minutes to show time. The opening bell. Oh, I just get so excited every day about that. All right, so anyway, it's almost game time. Coffee time for sure, though. I'll be back in 5, or try to be pretty close to 5.
First quarter liquidity sweep lockout. Market open. No trades during volatility. Observe only. Q1 smart money psychology lets trick retail into buying so we can offload. Sweep confirmation. Volume confirms sweeps, breakouts, exhaustion. Sweep volume spikes 150 to 220% of the prior 20-bar average. Occurs at or through the previous day's high or previous day's low. Overnight high or overnight low. Sweep completion continued.
Okay, looks like we're doing that lower sweep that I was talking about. Okay, so let's see what is down there. So when we start that low sweep, I always like to look at what's below, because price could continue to just drop.
Price holds above or below with no rejection.
So we call it a cascade when price is like falling. So this could be a widespread distribution. We are in a down market today. So we are gonna observe very carefully before entering a trade at the bottom. We wanna make sure it's a true reversal and not a full-on distribution day. Because with the macro catalyst, referring to like the global unrest or just the war with Iran. We've got quite a few different wars going right now as I think about it, but not to get too caught up in that. The market is its own entity and operates separately from that, but we do have macro catalyst. Okay, so with that being said, we are on caution of the downswing. So I have other sources that I refer to, barchart.com. That's bar, B-A-R, chart, C-H-A-R-T.com. And I go to key turning points. It's at the very bottom. So I put in the SPXW and we get key turning points down at the very bottom. It's a free report, and it gives us a second set of eyes, if you will, when it comes to institutional support and resistance levels. I'm not gonna go too deep into that, but I will make mention of it, and that's something we do need to refer to when we have questions. Like right now, my question is, how low can this go? Is it possible that if it goes to its lowest level, what is the probability that it will return back to the VWAP? And that's another thing, is the VWAP is a magnet, but it does not mean that it will automatically reach that destination. Okay, so got the lower limits here. 6.8. Oh, okay, so 6813. So we're at the second level at the bottom already. There's a level, a third level, 6794. That could, oh, it already dipped below. See that wick down into 6,800. I see a wick on the 5-minute chart on the SPXX. You can use my charts too. I know, like, we got Robinhood, Thinkorswim, and they don't track the SPXX or the SPXW very well sometimes. So my chart will work. So just doing an observation right now, looking at, The RSI is low. The volume candles are low. However, the average true range is still pretty high. So 1291 is a pretty high number. So the volume and the size of the candle is pretty big on the screen now. So it was traveling at a pretty fast rate. What I'm actually gonna look at is I'm gonna start looking at strike placement for the puts. So I'm going to the put side first, which is the downside. I'm making sure my instrument is XPXW. I'm making sure that it has today's date, March 2nd, and now I am going to concentrate on the put side. I'm going to look at my put placement. As I said, the range so the true demand zone is 6847, 6852. So the true demand zone is up above. The next support level from 6821 is 6813. And then we have a third support level at 6794. So I'm gonna look down in the 6794 zone. That was bar chart, barchart.com. Bar, B-A-R, chart, C-H-A-R-T.com. And you put in XPX and you go all the way down. Yes, I know. That's what I've been saying all morning, is that we're looking at the XPX chart. We use that for you're welcome. We use that for charting the XPXW. The XPX is a weekly chart. It has the VWAP line. The XPXW is a daily, and it does not have the VWAP line. However, they are the same index. One's weekly, one's daily, one has the VWAP, one doesn't. So we use the one for charting purposes that has the VWAP. And we use the one for trading purposes on the 0-day expiration as the trade vehicle itself. I hope that makes sense. We'll do a study eventually, so you can just put what is the difference between the SPX and the SPXW in ChatGPT, and it'll give you a more elaborate explanation. Again, looking at these strike prices, 6795. I'm gonna go $10 below that and still get a 25 delta. I'm cool with that, 25 delta. So I'm looking at selling the 6785 and buying the 6780. And I'm gonna cross over and take a look at the call side now. And I am going to use the VWAP as the resistance. So I'm looking at 6878 and I'm looking at the target above 6878. The VWAP line is at 6878. It's going to act as the resistance level. So it's at 6878. What's 6885, 6900? 6885 is going to be the first level of resistance. So 6885. So 6900 is like a magnet. So I'm going to take a look above 6900. Oh, 6900 delta is not looking that great. I don't want to chase the VWAP. I don't want to chase profits. So what I'm looking at here is getting above the VWAP line at 6878. 6878. That's like 6880, isn't it? Okay. So 6890. And 6895. Okay, the credit is decent. Just structuring the trade. So my trade looks like this.
First trade window open.
I'm selling
Only expansion trades
the
allowed.
6785
Displacement is required.
put, buying the 6780 put. I'm selling the 6890 call and buying the 6895 call. Price, okay, so the velocity RSI is on the lower end, volumes on the lower end, and the average true range is 14. I think this is a good trade. The window is open. We've done a liquidity sweep at the lower part of the box. I'm going to go ahead and send the order. Let me confirm order has been sent. I don't. So my order has been received. But it hasn't been. It's just sitting and pinned right now. So I'm gonna have to work it. I'm gonna have to negotiate a little bit. We go into the position, we go into pending, we look at the bid ask. There's a pretty wide spread, so I'm gonna try the mid price. Okay, so got the mid price and my order was filled and executed. So I'm in the trade. I'm gonna monitor my position now, and our goal is 25%. You have to take a look at that. So go ahead and set your trade up. We're looking at the risk and reward. So you have to set the trade up, and you'll be able to review what your risk and reward is going to be. It looked like, just based on what mine just executed at, I'm already up like $120. Well, it's bouncing. See the candle like is expanding, the bullish green candle, so it's already coming in my direction. We don't want like a reversal right now. However, it should return. I say should. The probability that it returns back to its original VWAP line and the range that it came from is very high. So there's a high probability there. Oh yeah, the question was risk to reward. I believe it was risk $100, get risk $300 to make $100. So I went with that. I didn't go aggressive on this trade. My goal these days is to keep stress low and just sit back, collect that 25% profit, and be happy with that. Now, I could have been more aggressive. I could have went with an in the money trade, which means that I could have priced my trade exactly at where the price is right now, 6825. I could have went in the money, or no, that would be at the money, and got a higher reward to risk ratio. However, I didn't want to see any red today. Like, you know what I mean? So I sacrificed some of the profits in order to just have a more relaxed trade. However, I mean, I don't knock it if you want to be more aggressive in your trade and get greater return on it. It's just that over time, that will bite you in the ass. And I'm going to say it like straight up. You know, I've been aggressive in my trades. I've made, you know, tens of thousands of dollars a day. And I continue to stay in that aggressive mindset. And eventually there will be a day where that like turns against you. which is okay, as long as you have more days where it's you'll be more profitable. I mean, you could be more profitable as long as you don't have a string of those. But what I was finding was I was getting greedy. And greed is a very destructive spirit. It's like you don't want the spirit of greed on you. So you want to reject that, and you want to stay. I want to reject that. I mean, because if you got a string of wins, $10,000 to $20,000, but then there's a day where you lose 30, then it's like, whoa, you just set back 3, 4, 5, sometimes a week's worth of profits, a week worth of work. And you don't want to do that. So that's why I emphasize, just take the 25% profits. But if you're in the money on a trade and you take 25% profit, I mean, that's cool. I know I'm running on and on about it because there is, it's quite a thought process, and there is some emotion involved with an in the money greater profitability trade, just like Walt had mentioned, like the iron butterfly and trade, and I did a little bit more like deep diving, and the iron condor is actually a higher probability trade. That's what Matt had said, and it's got a greater chance of succeeding. Can the iron butterfly possibly make more money? Yeah, it could probably like trade for trade, though. It would not, because you would lose more. But in terms of like a one hitter quitter, could it do it? Yes. However, the probabilities are stacked more in your favor with the iron condor. So let's see. I am in my first trade of the day, and looks like we're bouncing between 10-15% profit. So in other words, it's cooking, and we'll let it cook. So I think based on, well, let's find the mid price. That's important when you do the iron condors, your exit price. So I'm going to take a look at that right now. I hope I answered your question. I know I just kind of ran on and on. But the whole idea is to tell you as much as I know, right? Tell you everything I know. I try not to make it overwhelming, but sometimes I do, so I don't mean to. So I'm looking at my break-even price right now. So the break even for me is 685. So I'm using that number, which is my short put, which is the closer to the money put. And then I'm going to look at my call, which is 6890. And I'm going to look at the distance between the two. And you can rewind these sessions too. Like this live stream, you can totally rewind it and go back over something that you feel was missed, or you want to make notes and things like that. I think we might even be able to get a transcript out of here, right? You can print it and edit it. One of these days, I'll get a video editor to just edit and extract like things. I think that's where Dylan comes into play. Let's see. So 105 divided by 2 is 52. So I have my exit price at 6837. So this would be, and it prices at 6827. So we're gonna let this cook. Looks like I'm gonna get some consolidation right now, which is great for theta. Time decay works in the favor of the iron condor, which is why I like this strategy. We're gonna go into this. Looks like a. Uh-oh. My chart kind of stalled out. Sorry, I'm in analytical mode. Just want to make sure we're in a chop zone and price isn't going to come roaring out of there. Just looking at our GPS, our smart money roadmap, and identifying where there's going to be a compression zone. That means price will be moving sideways. We got a compression zone based on the smart money roadmap probabilities between 6865 and 6885, and my strike, call side strike is at 6890, so I'm good. I should be okay. Call put, okay. Right now we're at 14% green, and we're just letting it cook. Again, the profit target on this one is 500 bucks. With a goal today to make 1,000 today, 1,000 tomorrow. Got surgery on Wednesday. Yeah, I got to get this hand worked on, get some scar tissue removed, and I should be out of there. Got to show up at 5 and hopefully out by 9. Recovered and maybe get a trade. Maybe I can get a trade in on a Wednesday. And then Thursday, we're back at it. The profit goals go up because, again, we're scaling up here. So from 1,000 today to Thursday, 1,500 to 2,000. And that's about where we'll end the week, 1,500, 2,000 on Friday. So that would be 3,000 and 2,000, about $4,000 goal this week, and then we'll compound next week. So that is another lesson that I want you to make note of. Is I am going to scale this account and 2 other accounts up, and I'm going to show you the power of compounding. So I started this one with $2,000, and the whole idea is to finish at about 5,000 profit this week and a total of 7,000 in the account by Friday market close. Something like that, because this account only has 3 day trades in it. So I will use these 3, and then I'll switch to account number 2. And I don't think I'll make it to account number 3 this week, but that's okay. We don't want to overtrade either. So looks like price is on the move. RSI is growing. RSI has hit 49. Volume bars are still relatively low. Let's get rid of that. That's no good. Super confusing. Okay. Looking at the first resistance, it's actually looking above price at this point because my strike is at 6,890. So I'm looking at what has to happen for price to get to 6,890. And it has to, one, reclaim the VWAP zone, which is 6870. And then it has to get to the first resistance level from the bottom is 6885. So we got 1 and 2. And right now we're establishing a compression range. It looks like it's gonna be 6856 through 68. Well, we'll go. I'm gonna move the box a little bit. There, that's a better box. So I have the VWAP support at 6870. And that looks like where price is being drawn. I'm gonna take a look at the higher time frames. So on the higher time frames, it looks like on the 60 minute, we are at the VWAP line. 10 minute above, 5 minute VWAP is bending. We've got this break-in structure right here. Price is trying to return to the break-in structure. And the current VWAP is below price on the 5 minute. So that's gonna be our magnet. So I'll say that we've got an upper VWAP at 6870 and a lower VWAP at 6832. So that looks like compression between those 2 points. And I do believe we've got a new box, which I will draw. So here's the current thesis until it becomes invalid. Here's our line. I'm gonna put it at the top of that wick. And that's our new box. 6882 to 6826. That's our new range, our new box. As you can see, that's been the range from the opening bell to right now, 45 minutes in. And until we see otherwise, that's our trade zone today. Not too bad. Looks like a pretty tight structure. Premiums should be pretty good. So that second trade of the day should produce some pretty good premiums, which I am predicting the second trade of the day is going to present itself late second quarter, which is 8 to 9:30, and we'll see. Let's see, looking at volume bars are low, RSI is mid-level, the average true range, in my opinion, that's kind of high, 17. I'd like to see that number come down a little bit. However, we're not seeing any displacement candles, meaning like huge candles headed in one direction. We are seeing the gap being closed. However, the gap is at 6882, and we'll see. We'll take it from there. We're approaching the VWAP line, previous VWAP line, which is at 6870, and we'll see if it's acceptance or rejection at that level. Let's see, so the new range was established by the market structure. The market structure is showing currently what the high of the day has been and what the low of the day has been. So I just identified what the high was and what the low is. and that establishes our new daily range. So what we saw was a sweep that on the 5-minute chart, that long wick is illustration of the lower level sweep where the liquidity was. So that was the first target. And now we have a new target, which is the high of the day. There's liquidity up there. It's reflective of the highest price buyers are willing to pay today. And so that's where the supply is at the moment. Now there is liquidity above that level. However, prices may or may not make it to the 6,880 level, depending on what happens at the 6,870 level, the VWAP level. So we could see an acceptance or a rejection, but to answer your short question, it's what the structure is supporting as the high. So that becomes the range. The high to the low is the range. We are not in a compression zone anymore. So we had a little compression at here. Let's see what that was. Let me close that. Let me open that. We have a little hey, what? It won't stay there. In this range right here. What are we talking? There we go. 6848. We had a little compression, didn't last too long, and came out of it with a nice green candle. So, yeah. So that's what that looked like. Yeah, so we see our new range, and so we are now looking at things from the bottom up. So we are now looking at new resistance levels on the way up. So price has to get through the new resistance levels, which actually start where? Over here. So it's got to make its way through this zone right here, which basically at that point we have a new VWAP line. Well, it'll be above the VWAP line. As we can see, it's already above the today's current VWAP. We've got a range from 6835 to 6870, and it hasn't pushed 6862, and then the sellers show up and drive it back down. So we've got some compression right here, also known as accumulation. So this is where it looks like the institutions are going to take orders. So they're buying and selling at this level right here. 6863 becomes a supply and demand base. It's a base. So we can expect price to stabilize, if you will, at this level right here, because there's not enough buyers and there are not enough sellers for price to move in either direction. So enjoy the compression, and we'll get some theta out of this, get some time decay, and we're just letting it cook. What did I do exactly? I reset the range after it came out of consolidation. However, the range was already established and I just drew the line. I was operating from the previous day high. So originally, the upper line was on the previous day's high. However, price did not go in that direction. It went towards the previous day's low. So, which we still have the previous day's low. I moved that just a little bit, but not very much, because that's the direction the price went in. So yes, I brought the line down from the previous day's high to our current high. And it looks like price is not going to be accepted at the upper VWAP line of 6870, which is good for our trade. And I'm going to say yes to your question, Barry. I did reset the upper line. I reset the upper line because it's reflective of today's high. You're welcome, my man. Thanks for tracking along. Makes it fun. So what I'm going to do is make a note that we have a chop zone. And I'm going to show you what I'm calling the chop zone on the chart. This is our chop zone. That's 6868. So 6868 to, I'm going to use the lower VWAP. $6837. Which is good for the theta in this case. My midline is at 6837, so that would be my 50% line, which is cool as long as price stays chopping in this range. I'm at the bottom of the range though, 6837. So right where the lower VWAP is where I would love to exit this trade. However, we'll take that 25% as soon as we see it. Right now, I'm between 6 and 8% profit, so letting it cook. Cooking. Yeah, and just want to make a comment for the ladies and gentlemen that have to head to the offices. You could exit this trade right now with, looks like I'm getting 24. I see 13%. I see 10%, 5%. You could exit this trade with a profit and head to the office. It may be if you closed out now, it would be, anywhere between 20% and 10%, depending on what the accepted price of your bid-ask spread would be. However, you don't have to exit with huge profits. You can take a small profit and head to the office. If you want a higher number in return, then you need to buy more contracts, and you can exit with a smaller profit and still make money. For example, if you came in with 50 contracts and you exited at 10%, I mean, that's a good day. That's $5,000 almost. You know what I mean? So I know we think this takes all day. It doesn't. This is what I do. So I trade all day. However, you don't have to stay in the trade all day, which I am not going to do. Remember, I'm looking at 25% exit.
And continuation or reversal decision track. Midday chop zone. Range behavior likely. Capital protection phase. Smart money psychology. Let them think prices stably accumulate quietly.
Okay, so we're entering quarter two, which has a between 7:30 and 9:30. Maybe the time is a little off. I think I'm gonna update our quarter schedule. However, decision and expansion is what takes place in quarter two. So smart money declares direction via displacement candle. We have our direction established. We are compressing right now between the VWAP line. We're well within our square lines. We're mid square, pretty much spot on mid square. And we saw a pretty strong move at the open. It came from like 6.882 down to, well, that wick is like way down. Like, where's that wick? I just put it on the body of the candle, but they dipped down into like 6.795 zone. And that prompted some stop losses. So basically what they do is they go down there real quick, they trigger stop losses that retail traders have established, and they buy them real quick, and then they reverse the price. Smart money psychology. Yeah, that's something we'll dive into about how they trigger stop losses and do fake outs and things like that. But the box strategy helps us from getting duped and tricked and played like that. As well as the VWAP line, it's also a tool we use to not get tricked, duped, bamboozled, played. Yeah, you get my point. So that's our line, and the square helps us from all just tricks and tools we use to not make bad trades. I'm closing in on 25 to 30%, and I'm not going to overstay my welcome here. I will let price get to about 37. Looks like it's doing a revision right now and coming my way. And I'm going to exit this trade as soon as I see the 37 zone. As soon as it gets in the neighborhood. So in looks like just a few minutes, if it continues to come to 6837, what I'm going to do, well, I'll take 6838 actually. I have that as the lower VWAP, as you can see on my chart. That's going to be my exit. I'm eventually going to switch over to the 1 minute time frame. Well, I'll do that right now so I can illustrate why. So I'm switching over to the 1 minute time frame, and I'm looking at the candle formation on the 1 minute time frame. I want to make sure that I exit the trade on a candle that is reflective of my my price. So my price is 6837. So 1 minute time frame candle on the 6837, and I'm out. The 5 minute will not have a microscopic view of the candles. There will be a 5 minute view of the candle, which is not as sniper-like as the 1 minute candle. So I'm going to use the 1 minute candle for my sniper exit. So I'm going to take my shot. I'm going to zero in on the 68.37. And if that 1 minute candle gets there, taking the profit. And you see the structure. Wow, this is interesting. So you see the structure on the right is not filled in. The structure on the left, it is a map of what needs to happen on the right. So the right most likely is going to fill in a high probability that it will fill in what has happened and taken place on the left. So I'm looking there, 6896, 6803. Yeah, so I feel pretty confident that I will see my 6837 price. The longer, in my case, the better, because my theta is kicking in. But again, it's not a bad idea to take profit now. If your trade is green, I'm at 30% right now. I know I said 25, but here we go, being a little greedy. And haven't seen my number yet, though. So I'm going to go ahead and stay in this trade until I see my 6837, which is a probability. So I'm dealing with probabilities. And if I wanted, I could even change on the 1 minute. I could change the line again because on the 1 minute, I see. On the 1 minute, it's still the previous line, so it didn't roll over. So that's a key thing to make note of, is that our box didn't roll over. I mean, it didn't transfer. So new box. Top of the range-ish, 6866. Okay, so got the box over on the 1 minute now. 6867, 6826. So this is pretty sweet because we're not being threatened on either side. The wings are wide enough to provide safety, not under threat. This is where, I start thinking, like, should I hold it to expiration and get 100%? But, again, that's greed. So don't want to do that. I would rather exit this thing at 25%. We haven't stabilized. I have seen like 30%, 30, but it hasn't held there. So that's my goal. I don't have any reason to feel like my thesis is invalid. I have a valid thesis that is standing up to the price action. and it has not been tested or threatened. My thesis is solid. So I'm going to stand on that, and I'm going to let theta do its job, and I'm going to let price action do what price action does, and that's compress right now between 68.68 and 68.37, with the highest probability of another downward move to fill in this side over here to the left. We call that unfinished business in market terms. There are orders that have not been filled, and that's the way they fill it, is they come back down, they sell into it, and then they do a reversal back up. So anyway, that is a probability. We're going to take what we see right now, and we are just going to let price compress. So we're definitely in an accumulation phase, which leads to a distribution or supply. And seeing that we're in a bearish bias right now, most likely it'll be a distribution. With that being said, I'm going to flip back over to the 5 minute. Oh, I see our line moved. Our box moved from the 1 minute to the 5 minute. That's fine. Go ahead and redraw the box. I mean, because we use the 5 minute more than the 1 minute anyway. Oh, whoops. Hey, come on. There we go. Yeah. Oh, I need to readjust the box. Because this is our true range right here. Yeah, that'll be our true new range. That's where we are. So yes, I drew the box based on this gap down. Call that a gap down. And I'm also, until further notice, gonna get rid of that line. And now we have a new range, and that is it. I'm gonna move this line because there is a liquidity target at the lower level, and it's turned into like a high probability that there will be a sweep aimed at the lower level, which, let's go, true supply zone, true demand zone. So from the market, from the data I collected from barchart.com, we've got a lower liquidity target at 6813, and then one even below that at 6794. So I'm going to classify 6813 and 6794 as probabilities. Six, 7, 9, 4. My put is at 6785. So again, I've got a safe distance, and told you that was the objective, is to have a stress-free trade and just have a really good day with my iron condor. Fly, birdie, fly. So again, this all started with the bottom of the box. Remember, this started with the bottom of the box. A+ setup. That's what we look for, A+ setup. We saw it first thing this morning. Typically, that's how it works, is the box strategy. You'll see a liquidity sweep right out the gate. I mean, they're going for smart money institutions. They're going for liquidity. They're going for profits. They're going for supply. They're going for demand at one extreme of the box. And that is a trade opportunity that you can execute. And you could have exited this trade like 30 minutes ago with a small profit. You want larger profits, then buy more contracts. You have to scale your account up. You know, if you don't want to just drop, $10,000, $20,000 in there, then you just need to win the smaller trades and continue to scale up. That way it will compound over a week's time. I mean, a good goal, is $100 a day. So if you can extract $100 a day out of the stock market for 5 days consecutively, which taking 25% is totally doable, then that's $500 for the week. That's a $2,000 for the month, and you're on your way to scaling an account. Because the weekly actually will compound weekly. So it moves fast. Compounding really moves astronomically fast once you get to the $1,000 level. So I know, it probably seems even fast if you're at the $100 level, and all of a sudden, at the end of the week, you made $500, and then the following week, you can make $750 to $1,000, and then the following week, is $1,400. You do your own math, but I know the compounding power, and it's phenomenal. And you just have to have a goal. My goal this week, like I was saying, is to start the week off with 2 $1,000 days and finish the week off with a $1,750 or a $2,000 day twice. And I will extract, $5,000 out of the market this week. And the following week, I'll be targeting $7,500 to $10,000. And then with the goal this month, I'm projected. I'll have to refigure, my forecast, but I'm projecting, about 40 to 50,000 this month. I'll revise my forecast, but it keeps me directed and keeps me from being greedy the more in tune I am with my daily goal. So I know I'm looking at about 40 grand this month. However, on the day to day, I'm looking at about $500 a trade. So this one A plus setup is going to net me about 500, and then I'll do another one today. It'll net me another 500, and that'll put me at 1,000 for the day. Goal is met. I'm done trading 2 trades. And it all starts here. It starts on the day to day, looking at that goal. It helps me not be greedy and stay focused. I don't overtrade, which I've done. I mean, I'm sharing all the things that one has helped me be a profitable trader, and then 2, the things I did that made me lose trades. As I've been saying, and I'll always say, there is nothing worse than seeing a green trade turn red and you end up losing money that you could have just simply taken at a smaller profit. That's why I'm targeting 25%, which I am at. So I am being greedy right now. I'm seeing 30% on this trade, but it's in a very safe compression zone. So I can let it cook a little longer. And that is the difference between being greedy and being logically and just being logical and evaluating your probabilities. So we're in a compression zone right now. We will eventually break out of this compression zone, but the break would be still not in range to threaten my strike prices, particularly my sharp put and my sharp call. So with that being said, I'm not in a threatened, I'm in a good trade. So my trade was outstanding this morning. If I do say so myself, my placement was expert level. I'm going to say that today. It's not always, but it was today. And that's all that matters, right? is being in the moment. And so this trade was placed, excellently. I strive for excellence. I'm committed to excellence. I study, I analyze, I put in hours and hours of work and these strategies. And that's the thing about mastery, is it takes 10,000 hours, and I do believe I'm pretty close, if not fully vested. I think I might be fully vested in the 10,000 hours of application of myself, my mind, my body, my spirit, my everything has gone into being successful at this. So if you are disciplined, if you are committed, if you are dedicated, if you don't give up, then you can obtain mass mystery. You can solve the mystery and have mastery of the market structure. I'm going to call it market structure. I'm not going to even say the stock market, because market structure is far more important, because it transfers over to every single equity, every single stock, every single index. There is a structure. There is a market structure. The principles are the same: supply and demand, support, resistance, high and low, previous day high and low, the targets, liquidity pools and clusters. Bitcoin's the same, cryptocurrency's the same. This applies to everything. So let's say, one day you don't want to do SPX with Coach Titus anymore. Well, you go find another index, go find another option that you can apply Coach Titus's market structure smart money roadmap to. It works the same across everything. This is what it's all about, is market structure. That's how the institutions trade. That's how we need to trade. It's the psychology we need to learn, adapt, and abide by if we're going to trade options or have any amount of money in the stock market. So that's my lecture. I'm gonna stop. I'm going on a tangent. Okay, guys, looks like I'm at 40%. I swear to you, I'm going to take my 50%. You know, that's just sacrilegious. If you are a trader, you see 50% and you don't take it. That's ridiculous. Well, maybe I'll let it go to 60, to be honest. Then it becomes ridiculous. But it's just compressing right here. It's just making me money right now. You know, I hope you're in this trade with me. If not, well then that's cool. You can be in the next one or then the next one, or you know, this is what I do, so you can join me at any point you feel comfortable. But I was gonna say about scaling up. I was gonna say start with one contract, build some confidence. You know, establish your thesis. There's nothing better than seeing your thesis be validated by the stock market once you've done your technical analysis and you come up with your strike prices and you're like, okay, this trade could have worked. Well, go ahead and buy one contract. You know, one contract. I think I saw it at $300 today. On SPX. And if you don't want to do SPX, there's a smaller version of SPX that I haven't even shared with you yet. It's called the XSP. XSP. It is 1/10 the size of the SPX. Actually, I'll show it to you if you're still with me. I don't know who's there and who's not, but if you're still there, I'll show you again. But XSP. Oh, it's giving us problems. Okay, that might be wrong. Maybe XPX? Oh, there it is. XSP. Oh, why didn't that come up before? Here it is. Oh, again, the little baby lines. I hate that. So I'm going to need to do a little research on how we can get a decent chart on that. Promise. What's going on? Whoa. Hey, that's not cool, man. There. Okay. All right, I'm gonna take a little break from the action. Right now we're just compressing and I'm at 33% profits. I'm gonna let this thing run, I want 50%. I think I can get it this morning without being ridiculous. So we're gonna take, let's take a 15-minute break. Be back at 8:15. Yeah, just been like good. Maybe it'll be better if I heat it up. But it's a lot cooler. Yeah. Wow. I feel nice flavor.
wants to work on glutes, but the glute exercises that we need to do to build our glutes are mostly unilateral. If you're really focusing on glutes, it's going to be like your reverse lunge, hip thrust you can do with single leg and, but it's best to do like both versions, so a single leg hip thrust and a double leg hip thrust, but like RDLs, which that can be done either way too. Bulgarian split squats, things like that, and I just can't get her to understand. I don't know, and walking lunges and things like that. Those are going to be where we really activate the glutes, and I can't get her to understand that. Well, even last week when I did her and Nina, I wanted them to do kickbacks on the thing, and she's like, no. Putting that around my ankle, no. Every time I do it, and I'm like, no, sir, because last time we did it, you were fine. You said it was fine. So like, I don't know what you're like. And then she's like, I know, the unilateral stuff is good, but I can't do it. And I'm like, but that's a functional thing that we do. Like, that's how we walk, that's how we go upstairs, that's how is unilateral. So I understand that like doing exercises with weights is a bit different, but like you're doing unilateral work every day.
Try changing the depth.
But the depth of it is where the glute activation is.
You're just starting there and building up her.
But even
You don't have to go that low.
I feel like I've tried to say everything like,
I know.
don't do it with weight. Try it not as low. Just go as low as you feel is comfortable. Like,
Well, she needs a regression. So, single leg glute bridge, she can do, right?
yeah, she's
Okay.
fine with that.
So then, instead of a Bulgarian split squat, then just a split squat.
She won't do this with spot.
Okay. Well, then you can have her place her feet closer together, and she can go as low as she can and aim close together. Just a little squat. I know it's depth, but she just won't get over that mental block. I know it's frustrating, but he won't even try.
Yeah.
I know. pretty fun. Good way to start the day.
Yeah.
Q3 exhaustion zone. Late session window. Manage positions carefully. No revenge trades. Smart money psychology. Now that we have loaded, move quickly before retail reacts.
All right, it is 9:30, and here's our smart money roadmap update. Looks like price is being pinned, the upward limit. I couldn't get out of the trade. It's in pending status, so held it a little too long. I did attempt to close at 47%. And price moved pretty quick past my order request. And that'll bring up a great topic for us in regards to closing out trades. Closing. Closing is sometimes more difficult than opening. And there's really not much practice you can put into the close of a trade, other than to get a Thinkorswim account. You can open it. You don't have to put money in to use the platform. Or you can do TradeStation. You do have to have a minimum of $2,000 to open up TradeStation, but that gives us something to work on. We need to find a platform that we can use to do paper trades and just go through the practice of opening and closing a trade, because it does take practice. And I've opened thousands of trades and closed thousands of trades, but the deal is I missed the close on that one, and now I'm still in this trade. I wanted to take my 47% and be looking for the second A+ setup of the day. But here it is. I'm still in the first trade, which has been, pretty tricky. The first trade of the day, tends to be the most profitable trade of the day, but also just the trickiest in times of entry, managing, and exiting. It tends to be a bit more stressful trade. The second trade of the day is way more calm, because it's the higher probability trade, because most of the volatility is removed. So we're dealing with a tighter range, but less volatility. Volatility means just simply the price action goes up and down. That's the volatility. Prices, expanding, by 20, 30 points. But in the third quarter, around 10:30-ish or so, the window that opens up has less volatility to it. So the price doesn't move as much. So what I am looking at here is my short call is within 13 points of price action. That's not a very wide span. But again, you can look at the top of the square. I'm beyond the top of the square, which is good placement, if I do say so myself, for the time being. Most of the gaps have been filled. So we're looking at a true range for today so far, unless my thesis becomes invalid. But we are at the top of the box once again. So it would have been a great entry to be able to enter the trade right here. My price bar, let's see what's going on. Let's close this. Oh, I must have turned off the sliding price. I know I was trying to close the noise out. So the green. My price bar isn't working. I see the price in the upper right for XPXX is 677, but my little pricey deal over there isn't moving. What's going on? What line is that even? Hey, I want to fix that. Yeah, having our charts set up is tricky sometimes. The way, I mean, it takes time for real to set our charts up to look and feel like we want them to. What I'm not happy with is this green bar over here that says 68.74. That is not relative to the price action that I am currently monitoring. Let's see if I change to a different time frame. No. No. She's just not cooperating. It is live. I see movement on the volume bars. Oh, okay, let's try this old trick where we close it out. Oh, okay, this one's better. And there we go, this one's accurate. Let's change our time frame. Okay, I'm happy again. So looks like we are above the VWAP by about 20 points. So we can expect a return to the VWAP in this case. The reason I say that it's a high probability is because we have the two green bullish engulfing candles right here. That's a pretty big gap from, looks like 651 to 678. Got a big gap right there. That is unfilled business. We can expect price to touch the VWAP, return to the VWAP, and we'll reassess from there. So I feel confident that my trade and my thesis is still valid. I feel that the placement at the 6990 level was a good placement for my call side strike. My put side strike is like 6790, no threat at all. Oh, puts actually lower than that is 6785. So no threat at all on the put side. I feel good about that considering we started the day off. The market was down. Now we're up, but we've got some business to do at the 651 level where you see the gap. So just waiting for price to come back down to the magnet line, which is the VWAP line at 6851. So this is just cooking. Prices at 68.78 right now, and compressing. So we've got a compression. I am subject to move the bottom line up a little bit because that's gonna help determine what to do in the late quarter 3, quarter 4. If there's a trade opportunity, then we'll base it on the lines. So I'm going to go ahead and move that up to right there, seeing that it's sitting on the lower VWAP. And that's our new range. We got a new range. The new range is 684.37, which is today's high, and 68.24, which I'm going to call today's low, but we did have a wick that shot down into... The wick shot down to 6897. So we'll just keep that in mind as we let quarter 2 come to a close. Headed into quarter 3 now, and my trade's still active. We're pretty close to my call strike price, but price is stabilizing at the we'll call it the 680 range. What is at? Let's see what's at the 6880. Resistance is at 6885, so we've got a resistance level right where we are. If we go back, we'll see that I'm going to take you back. Let's go back a week. We can see that price has not gone too far above 68.80 in the last week. And we can take a look at the last month, and price has kind of been right about here in the last 30 days. Yeah, so that's where we are. We'll take a check back in. And I'm just going to fine tune that a little bit. Just want to raise the bar a little. 6887 is where I put it. Oh, that's a little high. I'll feel better if it's a little bit more precise. 6885. And that's where we're at right now, with the expected move back towards the VWAP at 6851. All right, I'm going to take a break here. Looks like I will be back in 30 minutes. Well, more like 45 minutes, 10:30. Be back at 10:30.